rapper Quavo allegedly failed to pay, now this is what TMZ say, a massive seven-figure tax bill.
Imagine waking up one day to find the IRS has claimed everything you own. That's exactly what happened to Quavo. The Migos rapper, whose net worth on paper hovers around $40 million, suddenly faced a $3 million federal tax lien covering years of unpaid income taxes from 2021, 2022, and 2023. That's right, the government now has a legal claim on his mansion, his car collection, his royalties, and even future earnings until the debt is cleared. No warning, no soft notice. Just Uncle Sam knocking on the door. It's the kind of financial nightmare that can happen to anyone who mismanages wealth, even celebrities. On paper, Quavo looks untouchable, an 11,000-square-foot Alpharetta mansion, a fleet of luxury cars including Rolls-Royce and Lamborghini, and ongoing revenue streams from solo projects and Migos catalog. But appearances can be deceiving. The IRS doesn't care about Instagram flexes. It cares about cash in hand, and Quavo's numbers tell a much different story. Add personal tragedy to the mix: the murder of Takeoff in 2022, the collapse of Migos' touring empire, legal disputes, copyright battles, and a broken management system. The perfect storm formed, and suddenly the tax lien wasn't just a number, it was a wake-up call. How does a superstar go from riches to federal claims? What went wrong behind the scenes? Quavo's reaction, the numbers, and the fallout are shocking. This story isn't just about money. It's about loss, mismanagement, and the harsh reality that fame can't shield you from consequences. So, let's break down exactly how Quavo ended up in this situation, and why it hits harder than just a simple tax notice. The IRS didn't just file a random lien out of nowhere. This is the result of 3 straight years of unpaid federal income taxes, each year stacking on the previous one with penalties and interest compounding. According to official IRS filings obtained by TMZ in March 2026, Quavo owes $915,660 for 2021, $887,486 for 2022, and $1,094,947 for 2023. That's nearly $2.9 million in total, a number that seems mind-blowing, but the real story is why it wasn't paid in the first place. Here's where things get messy. On paper, Quavo's net worth is roughly $40 million, thanks to his Migos-era earnings, solo projects like Quavo Huncho, streaming royalties, touring, and property. But the IRS doesn't care about paper wealth. It wants actual cash. And if your finances aren't properly structured, even millions can vanish into mismanagement, legal fees, or unpaid bills. Public records confirm Quavo owns an 11,000-square-foot mansion in Alpharetta, Georgia, bought in 2020 for $1.885 million, plus a car collection that includes a Rolls-Royce Cullinan, a McLaren 720S, a Lamborghini Aventador, and Mercedes Maybachs. On top of that, he has ongoing royalties and feature income. The lien touches all of it. But the backstory goes deeper. The IRS lien wasn't the first financial warning sign. Back in 2020, Quavo, Offset, and Takeoff filed a lawsuit against their longtime attorney, Damon Granderson, accusing him of malpractice and breaching fiduciary duty, claiming he favored the label over the artists. They alleged mismanagement of publishing, merchandising, and performance rights, potentially costing them millions. The case was dropped in 2021 unresolved. That's a pattern. People trusted to manage money properly, but the system failed. Then there's the personal tragedy. On November 1st, 2022, Takeoff, Quavo's nephew and fellow Migos member, was shot and killed at a private Halloween party in Houston, Texas. Takeoff's death didn't just devastate Quavo emotionally, it destroyed the group's financial structure. Touring revenue, which had been a major source of income, disappeared overnight. Takeoff's estate, estimated at $26 million, became entangled in Georgia's intestacy laws, with disputes between surviving parents and biological family members over royalties and assets. Quavo had to navigate grief, legal disputes, and the sudden collapse of the Migos revenue machine, all while the IRS tax clock kept ticking. As if that wasn't enough, Quavo faced additional legal and financial pressure from lawsuits unrelated to taxes. In September 2024, Louisiana rapper Elmont claimed Quavo's track Bubblegum borrowed elements from his 2015 demo, seeking compensation. In April 2025, visual artist Daniel Arsham sued over unauthorized use of a sculpture in a promotional video. Both cases remain unresolved. Then there's the 2018 valet lawsuit, where Quavo was ordered to pay $682,000 in damages after slapping a valet at the Encore Hotel in Las Vegas. That bill is still standing as of March 2026. All these layers compound the story of the $3 million IRS lien. This wasn't a single bad choice. It's the culmination of mismanaged money, misaligned teams, personal tragedy, and legal chaos. The lien is the symptom of years of financial missteps, some preventable, some not. And let's not forget the relationship drama. In March 2021, Quavo's romantic relationship ended publicly, with allegations of betrayal and cheating circulating. TMZ later released footage of a scuffle between Quavo and his ex on an elevator in 2020. Though no charges were filed, the incident added public reputation damage to the already chaotic mix. Gifts like a customized Bentley had to be repossessed, adding financial and emotional weight. By the time the IRS lien was filed in January 2026, Quavo was facing 3 years of back taxes during a period marked by grief, lost revenue, unresolved lawsuits, and personal drama. His reaction, or lack thereof, was telling. No public statements, no payment plan disclosed, nothing. The lien sits in the public record, compounding with interest each day. Experts say the IRS is more interested in collecting than punishing, meaning Quavo could negotiate a payment plan. $1.5 million upfront, small monthly payments, there are options. But that requires focus, planning, and liquidity. And after everything he's been through, from Takeoff's death to mismanaged funds, the path forward is anything but simple. Meanwhile, the public watches. Fans and commentators on social media quickly pieced together the numbers, calculating Quavo's unpaid taxes versus his net worth and assets. It's the kind of scrutiny that reminds even a superstar that paper wealth isn't real wealth if you can't pay your debts. Quavo's story is a cautionary tale. It's about money management, trust, grief, and the reality that fame doesn't protect you from consequences. Millions in assets don't matter if the foundation, accountants, lawyers, financial advisors isn't solid. And in Quavo's case, the IRS lien is the visible tip of a very deep iceberg. As March 2026 rolls on, Quavo's next move will define his path forward. Will he negotiate, pay off the lien, and rebuild? Or will the public narrative of rapper goes broke stick? One thing is clear. This isn't just about a $3 million tax bill. It's the story of a superstar navigating the intersection of wealth, loss, and accountability in the harshest possible spotlight. March 2026. The IRS lien is public, Quavo's team has been silent, and the streets are buzzing. Fans, financial commentators, and even rival artists are dissecting the situation, trying to understand how a multi-millionaire rapper could be broke on paper while sitting on millions in assets. But the truth is more nuanced. It's the classic trap of celebrity wealth versus liquidity. Let's start with the real estate. That Alpharetta mansion, 11,000 square feet of luxury, is now under a federal claim. Technically, Quavo still lives there, hosts friends and collaborators, and uses it as his operational hub. But the IRS lien means that any sale proceeds or refinancing would first go to satisfy the back taxes. For a man used to moving freely in the world of high-end real estate, this is a hard stop, a legal hand on the wheel of his empire. Then there's the car collection. Rolls-Royce, McLaren, Lamborghini, Mercedes-Maybach, all high-end symbols of success. Yet, under the lien, they are essentially untouchable for new investments or resale without Uncle Sam's approval. It's a stark reminder that luxury doesn't equal financial flexibility. Many fans see the lifestyle, but never see the legal and fiscal strings attached. Next, the royalties and ongoing income. Quavo's solo projects, features, and Migos catalog still generate money. Streaming, licensing, festival appearances, they're flowing. But with 3 years of unpaid taxes, The IRS has a senior claim on future income. That means that every check, every streaming deposit is legally encumbered. The money is technically his, but can't be fully accessed for personal use until the debt is settled. Meanwhile, the public narrative escalates. Social media explodes with theories. Some say Quavo mismanaged funds, others blame shady management or accountants. But industry insiders point to a perfect storm of grief, legal disputes, and misaligned advisors. Takeoff's death had disrupted both the personal and financial structure of Migos, leaving Quavo exposed. The duo and solo projects that replaced the Migos revenue weren't enough to cover prior missteps, compounded by interest and penalties. Legal pressure mounts beyond taxes. The copyright lawsuits, Elmont and Arsham, remain unresolved. Each requires attorneys, court fees, and potential settlements. The valet verdict of $682,000 is still unpaid. On paper, Quavo is wealthy, but on liquid cash and immediate access, the situation is tight. Public perception doesn't account for these layers of complexity, which makes the headline "Quavo broke" clickworthy but misleading. Family tensions add another layer. Takeoff's estate, split between his mother Titania Davenport and father Kenneth Ball, remains active in court. Royalty streams, touring revenue, and past Migos earnings are entangled in intestacy proceedings, with Quavo caught in the middle as both cousin and executor figure for ongoing collaborations. Every business decision, every negotiation, must now consider both family dynamics and legal ramifications. Then came the Offset friction. Though the two eventually patched things up by late 2025, the public split following Takeoff's death had real financial consequences. Without group cohesion, there are no reunion tours, no joint festival headliners, no shared brand leverage. Quavo's independent revenue streams are constrained by the lack of group synergy that once guaranteed multi-million-dollar checks per tour. On top of that, the personal drama with SETI and public social media fallout still casts shadows. TMZ elevator footage, repossessed Bentley, and reputation management, while seemingly minor compared to multi-million-dollar liens, affect brand partnerships, endorsement deals, and fan engagement, all of which influence the potential cash flow necessary to satisfy the IRS lien. By mid-March 2026, industry insiders speculate on Quavo's options for resolution. Payment plans are a standard approach. The IRS could negotiate installments, potentially reducing immediate financial stress while preventing further penalties. A $1.5 million upfront payment with smaller monthly installments is realistic, though it requires immediate liquidity, a problem if assets are tied up, mismanaged, or already claimed in other legal disputes. Meanwhile, Quavo's touring commitments continue. A headlining slot at the Mad Island Festival in St. Martin later in March 2026 is still on the books. Live performance revenue is crucial, potentially giving Quavo the cash flow necessary to negotiate with the IRS. Every festival check becomes part of a broader financial chessboard, balancing legal obligations, lifestyle expenses, and business investments. Public discussion grows intense. Social media reacts to the human side of wealth mismanagement. Fans express shock that someone so successful could struggle to pay taxes. Analysts emphasize that this is not uncommon in hip-hop or entertainment. Artists often face layers of mismanaged funds, predatory management, and unanticipated expenses. Quavo is a textbook example of this phenomenon, though on a much larger scale due to fame and wealth. Sources close to Quavo hint at internal strategy. His team reportedly reviews which assets can be liquidated or monetized, whether through property refinancing, royalty advances, or feature fees. The goal is to satisfy the IRS lien while avoiding seizure or forced liquidation of high-value items. Every move is time-sensitive, interest compounds daily, and public scrutiny amplifies pressure. Quavo himself has remained mostly silent. No statements, no interviews, no public payment confirmations. The silence feeds speculation. Is he stalling, negotiating quietly, or scrambling to find a solution? The answer likely lies somewhere in between. Grief, mismanagement, legal entanglements, and the weight of 3 consecutive tax years create a perfect storm of inertia. Financial advisors weigh in. They emphasize that paper net worth doesn't equal liquidity. Assets like homes, cars, and catalog royalties are valuable, but unless properly structured, they cannot immediately satisfy urgent obligations. A $3 million lien on a $40 million estate might look minor on paper, but execution is complex, particularly when previous advisors may have failed in their fiduciary duties. The drama doesn't stop at finances. There's also the cultural and reputational component. Headlines of "Quavo broke" dominate news feeds, memes circulate, and fans debate responsibility. This public pressure adds psychological weight, compounding the emotional and financial stress already in play. Quavo must navigate public perception, personal legacy, and legal obligations simultaneously, a trifecta of challenges few celebrities ever face in such concentrated fashion. The broader lesson is clear: wealth is only as strong as the infrastructure supporting it. Mismanaged funds, legal oversights, personal tragedy, and unplanned events compound over time, leading even a superstar to face serious financial vulnerability. Quavo's situation underscores the delicate balance of fame, fortune, and accountability, and the speed at which it can unravel. By the end of March 2026, Quavo's path forward hinges on liquidity, negotiation, and strategic planning. Will he leverage touring revenue and royalties to satisfy the IRS? Will he restructure assets or liquidate selectively? Or will public scrutiny escalate the situation, forcing a more drastic resolution? Every day counts, and the lien grows larger with interest. Meanwhile, the story is being watched across the industry. Other artists, managers, and advisors are taking notes. The IRS waits for no one, and no level of fame insulates you from consequences. Quavo's struggle is now both a personal and professional cautionary tale, a reminder that financial oversight, legal protection, and personal responsibility are non-negotiable, even in a multi-million-dollar empire. And as fans debate online, as media outlets track the lien, and as the next festival payday approaches, one fact remains undeniable: Quavo is in a high-stakes game with Uncle Sam, and every move from here will define not just his finances, but his legacy in hip-hop. April 2026. The Quavo IRS saga reaches a turning point, and the streets are watching every move. The federal lien remains active, a $2.9 million shadow over his empire, but now insiders hint at quiet negotiations behind closed doors. The reality is clear: Quavo cannot simply ignore this. Uncle Sam has the first claim on his assets, and the clock is ticking. Every day that the lien sits unresolved, interest and penalties stack, making a once manageable bill a financial boulder. The first step is liquidity. Sources confirm Quavo is evaluating his assets: the Alpharetta mansion, the luxury car collection, and ongoing revenue streams from streaming royalties, touring, and features. The problem isn't the value, it's access. Paper wealth, like his Migos catalog and properties, doesn't translate directly into cash flow. Quavo and his team must prioritize what can be mobilized without jeopardizing his lifestyle or ongoing projects. Meanwhile, the industry is buzzing with analysis. Experts note this is a textbook case of celebrity finance gone wrong: mismanaged funds, inadequate oversight, and compounded legal obligations. The IRS lien may look shocking to fans, but insiders recognize the pattern. Quavo's situation is not unique, yet the scale, both in dollar amount and public exposure, is unprecedented for an artist of his level. By mid-April, rumors circulate that Quavo is considering a structured payment plan with the IRS. These plans allow for installments over months or years, a legal lifeline to prevent asset seizure while satisfying the debt. Industry insiders stress that the IRS often prefers receiving payments gradually rather than initiating immediate seizures, a critical window for someone navigating multiple financial pressures. Financial advisors also note the psychological element: public scrutiny amplifies stress. Headlines calling him broke, memes circulating on social media, and fan debates create a pressure cooker environment. This isn't just about numbers. It's about reputation, legacy, and brand stability. Every misstep or delayed payment risks endorsement deals, festival bookings, and future collaborations. Quavo's touring schedule becomes a crucial lifeline. Festival appearances, headline shows, and ongoing features are direct pathways to generating cash flow necessary to satisfy the IRS lien and rebuild financial stability. Each paycheck becomes a calculated move in a high-stakes game, balancing legal obligations, personal expenses, and long-term brand management. Meanwhile, the ripple effects of past events, Takeoff's death, Migos' collapse, prior legal disputes, and management challenges remain influential. They compound the complexity of recovery, reminding everyone that even the highest-earning artists can be vulnerable when multiple systems fail simultaneously. Quavo's resilience is now tested not just in the studio or on stage, but in the courtroom, the boardroom, and the public eye. Legal and financial experts suggest that Quavo's path to resolution involves strategic asset allocation, liquidating only what is necessary, leveraging royalties and advances, and possibly renegotiating terms with creditors. The goal is not just to pay the IRS, but to preserve his lifestyle, career, and future earning potential. By late April 2026, public statements remain minimal, but sources close to Quavo indicate calculated action behind the scenes. Negotiations, financial restructuring, and legal reviews are ongoing. Fans, commentators, and rivals alike remain glued to developments, but the narrative is slowly shifting. Quavo is not broke in the traditional sense. He's navigating a high-pressure financial labyrinth that would challenge anyone. The broader lesson is clear. Celebrity wealth is complicated. Assets, income streams, legal obligations, and personal tragedy intertwine in ways that can leave even multi-million-dollar stars vulnerable. Quavo's saga underscores the importance of financial literacy, trusted advisors, and proactive management, highlighting how fame and fortune are only secure when carefully structured and protected. As May 2026 approaches, one truth remains: the IRS lien is still active, but Quavo's path forward is navigable. With careful strategy, negotiation, and consistent cash flow from touring and royalties, he can satisfy his obligations, preserve his empire, and continue his career. The saga serves as both a cautionary tale and a testament to resilience, reminding fans and artists alike that even in the face of immense challenges, recovery is possible with focus, planning, and action. Ultimately, the story of Quavo and the IRS is a lesson in wealth, responsibility, and endurance. Fame alone does not insulate anyone from the law, and even the most successful artists must confront reality head-on. For Quavo, this is not the end. It's a turning point, a moment to recalibrate, recover, and emerge stronger, both financially and personally.